Welcome to Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, President Trump is ramping up his effort to try to take control of Greenland. Trump says the U.S. should control the island, mostly for national security reasons. It's currently owned by Denmark, a NATO member. He's doubling down on his tariff threats on European nations, warning any country that does not comply will be hit with a 10% tariff. That'll escalate to 25% later this year. And for France, it could be even worse. Trump is warning of a 200% tariff on wine. The headline sparking a global market rout. At these levels, the S&P 500 is on track to wipe out all of the year's gains. The Nasdaq is down nearly 2%, and bonds are selling off too in the U.S. and around the world. Investors, meantime, are seeking safety, both gold and silver rallying, both of them bouncing to fresh all-time highs. Meanwhile, investors will also be keeping an eye on earnings as the reporting season continues to heat up. Dow component 3M posted results ahead of the open, and after the close, all eyes will be on Netflix. The streaming giant will report after amending its takeover bid of Warner Brothers Discovery to be all cash. Let's get a check in on stock futures. We are seeing a sharp sell-off being indicated here in the futures market here this morning. Dow futures pointing to a drop of more than 700 points at the open. S&P futures pointing to drop about 1.5%, and Nasdaq 100 futures indicating a drop of 1.75% at the opening bell. All of this as President Trump is threatening tariffs on European nations supporting Denmark and his push to purchase Greenland. The tariff announcement follows a week of meetings between the U.S., Denmark, and Greenland, and now deepens the divide between the U.S. and its NATO allies. For more on the developing situation, we're joined by Yahoo Finance Washington correspondent Ben Werschkul. Also with us, Kathryn Rooney, Vera, the chief market strategist for StoneX, which is a financial services firm that helps companies and investors access global markets, trade, manage risk, and more. Thank you both for being here. Ben, I want to get started with you. And a little context here, I think, is necessary because although the president has talked about Greenland for a while, he brought it up in his first term as well. For people who are watching, like, why Greenland? Why the focus and one might even say fixation on Greenland right now?
Right. What I think is making this issue especially confusing is that you get two different answers to that question just from Trump himself. You mentioned the national security parts at the top. This is a combination of oil, rare earth minerals, missile defense, all these issues that Trump talks about most commonly as his reason for wanting Greenland right now to take it into U.S. control from Denmark. Frankly, the facts, there's a lot of holes in that based on the fact that U.S. oil companies, rare earth companies, and the U.S. government itself has a lot of access to Greenland already, and that's not expected to change. So that's the national security case that Trump is making. He made it again last night in a series of overnight posts. But the other point here, I think, is that he's also saying clearly that this is partly kind of personal to him. He sent a message to Norway's leader over the weekend that partly here is that he feels he's emboldened to take Greenland because he was denied a Nobel Peace Prize. He said, as he put it, he doesn't have to think purely of peace anymore. Not only did he send that message to Norway, he then his team forwarded on to a bunch of other European leaders. So there's clearly kind of a personal element here, a fixation on getting this, as you put it, to sort of because of this Nobel issue, but also kind of a larger priority. As you mentioned, he's been talking about this since the beginning of his first term.
And so what are the, for people who weren't following all the blow-by-blows over the weekend, what levers is he now threatening to pull if he doesn't get the buy-in of the rest of Europe on this?
Yeah, so there's these tariffs are his main lever he's trying to pull. It's 10% tariffs starting next month, 25% going forward. There's a lot of questions about whether this is a threat to kind of increase his security, U.S. security guarantees in Greenland or more. He's also talking about tariffs kind of more broadly. He's threatening new tariffs on France. That's over a sort of separate issue of a peace institute he's trying to get started around the issue of Gaza. So it's all kind of tariffs. It comes back for Trump for tariffs. Tariffs are the way he thinks he can kind of get everything he wants. This is a trend we've seen in the entire first year of Trump's term. It also comes, I would note, as the Supreme Court is sort of set to have a decision on the legality of a lot of Trump's tariffs, potentially today, but at least in the next few months.
And Kathryn, all of this is happening amidst the backdrop of the World Economic Forum in Davos, where a lot of these world leaders, including President Trump tomorrow himself, are going to be speaking. And President Macron of France just spoke and kind of raised the possibility of countermeasures from Europe, but kind of tried to play it down. What do you make of the reaction we're seeing in the markets, and how seriously you think, or not, investors are taking all of this?
I think the market is reacting to the downside probably because of the escalation of tariffs more than the threat to Greenland. I'll add to Ben's point. I think the U.S. already operates key radar and space infrastructure in Greenland, so we have a presence there. But my understanding is that Greenland is for sure a security issue. You know, it centers on Arctic defense, missile warnings, and critical minerals. And as ice melts, my understanding is that Arctic shipping lanes expand.
Well, so Kathryn, if I may interrupt you for a minute, is the rationale sort of irrelevant? Isn't it more relevant that the president is trying to take over something that belongs to a NATO member and is threatening these tariffs? I mean, is like the rationale, say what you will about it, but
I think it is relevant because this is not like an invasion. So this is not something that's going to, you know, send the markets reeling because Trump invades Greenland. I think what's happening here is he's trying to build the NATO presence and buy Greenland. So that my answer to you is that I don't think this is going to send the markets reeling. You know, his argument is that Russia has militarized the region. China says they kind of own the Arctic Circle now, and Denmark can't defend Greenland, which is in our own backyard. I think, Julie, what's happening here is that this is part of Monroe Doctrine 2.0. We saw it in Venezuela. You can't compare the two because Venezuela is a different scenario, but this is part of, this is our neighborhood. We're going to defend it. I don't think the markets are going to care that much. I think today the markets are down. Things are going to resolve. You can see the Trump playbook and things certainly, I think, in my view, resolve. So I care very little about this, honestly, Julie. I think that what we should be focused on is rates. I think rates set the tape. I think if we get, you know, fiscal profligacy continuing to the upside, if we get a resurgence of inflation, all bets are off. I think the market drops. That's not my base case, but I'm way more concerned about that than I am about Greenland or 10% tariffs, because we've seen this playbook before. We saw it last year. Markets don't care. Inflation was minimally affected. Economic growth is above potential. I think the biggest risk from my perspective, Julie, going into this year is an overheating of the U.S. economy, a resurrection of inflation, because the economy is growing so well. So yeah, Greenland is not the main focus for me or for my investors.
If, when you talk about fiscal, though, I mean, if we bought Greenland, presumably it wouldn't be cheap. I mean, that would be spending, right? I mean, that would be a big spend.
Yes. Yeah, I don't think it'll blow away the deficit. I think we're already doing that. I mean, we have 6.5% fiscal deficit, and the main drains on the fiscal accounts are not the purchase of Greenland. They're the ever-growing cost of entitlement programs. That's the main drains on our fiscal account. And now it's interest payments, right? So interest payments now exceed, and by a large amount, defense spending. So it's interest payments, Medicare, Medicaid, and Social Security. I don't think that changes. I think fiscal deficits stay markedly above pre-COVID levels. And I think that just leads to a new normal of inflation. We're going to get inflation of 2.5% to 3%, and that's the new norm. I think the Fed can't cut to pre-COVID levels ever again. So we're probably seeing a Fed that drops rates max 2 times this year at 25 basis points each, unless we get a surge on unemployment. And that would have to, in my view, break 5% for the Fed to move more than 2 times.
Ben, you mentioned that it's possible that we could get a Supreme Court ruling on the tariffs today. We know they're in session and they've been sort of coming out with rolling rulings. Is what the president is threatening over Greenland, does that influence the case? I mean, I know the arguments have already closed, et cetera, but, you know, because it is a different kind of threat over a different issue, does that have any effect or bearing on the ruling?
I mean, it doesn't necessarily have an effect on this decision. As you mentioned, the arguments are already done, and the justice may be considering that. They have not outlined exactly how he's going to follow through on these threats. It would presumably be these IEEPA tariffs. This is what the Supreme Court is deciding is legal one way or the other. These blanket tariffs that Trump is imposing, this is how he's imposed his other tariffs. The Trump administration has said that they're going to follow up these tariffs, even if they have a negative ruling, with other authorities. Section 301 is a major one. They could a lever they could pull to kind of essentially replace these International Emergency Economic Powers Act base tariffs with a different authority going forward. So I don't know that it affects the decision. It definitely affects kind of how easily or how quickly Trump can add or subtract tariffs in the days ahead to follow up on this threat, as well as keep his other threats going forward.
And Kathryn, it feels like most of what you're discussing from a sort of fiscal and monetary policy backdrop, for that matter, sort of leaves aside any tariff back and forth, right, and sort of the short-term stuff that's been going on. So given the backdrop that you're talking about, what are the implications for equities, for rates, for other assets?
Yeah, I think that if inflation expectations remain stable and anchored and the 10-year doesn't fly, I'm talking, above 4.5%, I think S&P does well this year. Earnings are pretty good. Tariff revenues are at $300 billion, so that's not talked about quite a bit, but we have had an influx of cash into the coffers, and that is relevant. Without a market jump in inflation nor recession, which many of us, including myself, called, and we were wrong. So I think that markets do well this year, unless we get rates selling off, because of course discount rate sets the tape for everything. So it's less about earnings, in my view, Julie, and much more about where rates go. If they stay low, if the Fed can cut, inflation doesn't resurge. Then I think we can get another 10% upside in S&P, which is historically unusual to have so many years of double-digit growth.
It is. We'll see if it happens. Kathryn, thank you so much. Good to see you. Ben, thank you. Appreciate it. Coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Now time for some of today's trending tickers. We are watching Warner Brothers Discovery, ServiceNow, and 3M. And here with me to talk more about all this is markets and data editor Jared Blickry. Let's talk about Warner Brothers Discovery. Yet more developments here,
You knew it was going to
Jared.
happen.
The stock is edging lower. Netflix has amended its bid for the media giant. The offer now is all cash. Shares of Netflix are higher. Paramount Skydance is under a little bit of pressure. This was something that was reported on last week that could be coming. Here we are.
Yeah, so all cash makes this deal a little bit easier to get through. It also raises the stakes for Paramount, which their $30 per share offer could be raised, and there's speculation it could go to $32 first. But the WBD board has unanimously backed Netflix in this endeavor. And so prior, Netflix was talking about $23.25 in cash and $4.50 in stock, but now it's all cash. And here's a Bloomberg reaction. The move raises the stakes for Paramount Skydance, which has argued its $30 all-cash offer is superior to that. And WBD has repeatedly rebuffed Paramount, yet we think it could re-engage if Paramount boosts its offer to at least $32. There's one of those $32 mentions. Though even an even higher price may ultimately be required to sway the board. I would also add that as part of the deal, the network, Discovery Global, that would not be included in the Netflix deal, and it would be included in the Paramount. So it's not apples to oranges here.
Right, it is not. And last week I talked to Rich Greenfield, who is a veteran media analyst. He's now at Lightshed Partners. He said he thinks what ultimately will happen is that Paramount will step away because it won't be able to keep increasing its bid, because Larry Ellison, who is helping fund his son David Ellison's quest for Paramount Skydance, his appetite and ability to fund this unfettered it's limited.
Bidding war,
Yeah, exactly. And so Greenfield thinks that ultimately Netflix will win out. Paramount will try to chip away at regulatory concerns around this, but he thinks Netflix won't close on a deal until after 2026.
Interesting. So the timeline is extended. If I could just do a little technical analysis here, if we go to the Wi-Fi Interactive, I have Netflix. So the shareholders like this. Netflix is up 1.5% in the pre-market, and I will go to a 6-month chart. You can see Netflix is down about 30%. So it hasn't been doing well. And we know that they're reporting earnings on Tuesday after the bell. So key things that investors are going to be watching for: subscriber ads. Are the net additions, are they re-accelerating after the recent slowdown, especially when it comes to international markets? The sales and average revenue per user. Are price hikes and ads lifting revenue per user without hurting the churn, that is people canceling their subscriptions? And then margins. Can Netflix hold or expand operating margins while spending on content and sports? So there's going to be a lot of focus on on the first kind of quasi-tech earnings that we're getting here after the Bell Tuesday.
Should be very interesting. All right, let's talk about ServiceNow. Speaking of tech,
yes.
The company is striking a deal with OpenAI. OpenAI's models will be in ServiceNow's sort of agentic AI efforts. They're teaming up on this.
Yes, and this is the trend. So I've been talking to guests about this on Stocks in Translation, the podcast that we do here, and this should be the year of enterprise AI. So we've had the chatbot stage, and that was really interesting, and we're still going to have improvements in that, but we're moving beyond it. So what are these companies offering? OpenAI is going to give agent capabilities to the customers of ServiceNow. They'll be able to perform IT functions. They can talk to people on the phone. They can do things that required humans prior, even simple things like turning a computer off and on. But we're going to have to see how comfortable the customers are in deploying this technology, because there's going to be security lapses. There's going to be security breaches, and some of the high-profile ones are going to scare customers away. So I don't think personally it's a bad thing that this rolls out slowly and fits and starts, but we'll have to see what the adoption is.
Yeah, and the shares are getting a little bit of a boost this morning. Those ServiceNow shares are not huge. They report their earnings on January 28th. And by the way, that stock is down about 40% over the past year.
Yes.
We've really seen a lot of these enterprise software companies get smacked because the thinking has been that they would be replaced by the LLMs rather than augmented by. So
and
that changes.
Yeah, and that's been a really interesting dynamic to watch in the markets this year, where we have chip stocks, by and large, a lot of, especially some of the smaller ones, playing a catch-up game. Chips have been doing well. Software has not. So that accounts for the fact that tech has been going sideways for months. So we'll have to see how that resolves.
We will. Let's talk about 3M, too, because that industrial giant reporting earnings ahead of the opening bell. The results beat expectations, but that wasn't enough for Wall Street. It looks like the outlook for this year was short of what analysts have been looking for. They're looking for adjusted earnings per share of $8.70 this year, as much as $8.70, but the midpoint, it looks like, was a little below.
Yeah, so a little bit of disappointment there. Adjusted EPS came in at $1.83 versus $1.80 estimated, so that was a little bit of a beat. Organic sales up 2.2%, adjusted operating margin up 21%. But what does 3M do? I mean, I'm old enough to remember when I was kind of a kid, they were launching this campaign to make themselves known. This is a company that does three basic things: safety and industrial, transportation and electronics, plus they have a consumer division where they produce Post-its. So everybody knows what Post-its are. But what I found out is that they're actually into data centers. They do some of the cabling. That's only about 3% of the revenue mix. So we've seen this huge surge in data center stocks. I don't know that it's a big story, but they're also into nuclear, and not in a big way as well. But they just have their hands in a lot of different businesses. So key for them is being able to fill their product pipeline and keep those products pumping out. If we can go to the Wi-Fi Interactive just briefly here, I will show you that 3M is down 4% in the pre-market. And let's go to that one-year chart. That is up 20.5%. And I'll show you the 5-year, and it is right back to the 2021 peak. So 3M has been kind of a turnaround story recently. It is back to a key technical level. I'll put the 10-year on. I believe this high here in about 2017, 2018, that's the ultimate high. But we got to get through this resistance first, and probably not happening off of this earnings report.
And if you remember, during the pandemic, they were making masks.
Oh yeah, masks, huge.
I don't remember if they even still own that business.
Like I said, lots of products,
they make so many
lots of
different
shifting
things.
products.
Exactly. Thanks, Jared. Appreciate it. Shares of D.R. Horton are under pressure after it reported results for the fourth quarter that showed slowing demand. Home builders generally are also facing pressure from the Trump administration after the Federal Housing Agency director said the company should stop doing stock buybacks until housing costs are lower. Joining us to break all of this down, Yahoo Finance housing reporter Claire Boston. Hi, Claire. So tell us about D.R. Horton's quarter, first of all, and what we heard from them amidst this housing market backdrop.
Hi, Julie. Yeah, so I think the thing investors are focusing on this morning is this profit number that fell 30% from a year ago. It did beat analysts' very low expectations, but that's not where you want to be. And it's a reflection of just the continued challenges in the housing market right now when it comes to affordability. Revenue was also down to $6.89 billion. That was down from $7.61 billion. And they talked a lot about how they think they're going to continue to need to do incentives. That's things like mortgage rate buy downs and just additional sweeteners to get people to buy homes in this current environment when housing is just so expensive and people are really feeling pinched.
This is so interesting to me, Claire, because it really, my ears perked up because you and I have been talking about this for a while. When Bill Pulte talked about that these companies are making money hand over fist, because that's not really what's, certainly from a margin perspective, as they keep offering incentives, that doesn't really seem to be what's going on in this current environment.
Right. I mean, pretty much all builders, Horton included, have really seen their margins compress. They are still healthy, but they are really taking a hit here because they're trying to get people into homes and people are not really wanting to buy them. And, Pulte has talked a lot about buybacks being an issue. And I will say that D.R. Horton is a big buyer back of stock. They repurchased over 4 million shares this past quarter. They also pay dividends. Pulte, I think, wants to see them put all that money back into housing supply and build more. But D.R. Horton doesn't want to do that if the demand is not there, because the big risk is that you end up really hurting the people who just bought homes from you because home prices then would fall. And it's really this sort of tug of war between the people who have already bought and the people who want to buy for the first time.
Claire, did they address the buyback pushback from Pulte at all?
Yeah, so we didn't hear anything on the initial report that came out this morning, and the call is sort of ongoing now. But, I think we'll have to kind of see how the builders approach this. This is not going to be something that they are going to want to get rid of. This has been one of their main tools to really reward shareholders in this kind of tough economic time when it comes to actually buying.
Claire, thank you so much. Appreciate it.
Thank you.
Coming up on Yahoo Finance is Opening Bid. Executive editor Brian Sazzi is joining us now with a little teaser of what's coming up on that show. Saz?
Tariffs, Julie. Done. Back to you. No, we're also going to talk about housing. We have Ankur Jain, the founder and CEO of Built Awards, just taped a new podcast with me. We're going to lock in on specifically what he said about the housing market. Julie, like you were just talking about with Claire, very much top of mind this week as President Trump heads to Davos.
Yeah, and I thought it was really interesting when we talked to investor Kathryn Rooney Vera at the top of the show, and she said she doesn't really care about the Greenland issue, and she doesn't think investors are going to care ultimately that much about it either. So I'm very curious to hear what your panel has to say on that.
I'm curious too, Julie. I can't wait.
Good. You'll be staying tuned. I'll be staying tuned, and hopefully everybody else will too. All right, looking forward to it, Saz. That does it for Morning Brief. Much more ahead on Yahoo Finance.